This is Nightly Business Report with Bill Griffith and Sue Herrera.
Dow drags. The blue chip index falls triple digits as 3M has its worst day in 30 years, and Intel says its financial results for 2019 will not be as good as once thought. Trillion-dollar club. Microsoft is now part of that exclusive group. But what happens to stocks when their valuations enter the stratosphere? Box office blockbusters. Superheroes are known to break things, and Disney's Avengers are breaking record after record. Those stories and much more tonight on Nightly Business Report for this Thursday, April the 25th. And we do bid you a good evening, everybody, and welcome. Sue is off tonight. It was a case of the blue chip blues. The world's most recognizable stock index was the problem child today. The Dow fell sharply, led lower by 3M, which saw its worst one-day rout going all the way back to Black Monday of 1987. 3M's weak quarterly report dragged other industrial stocks lower as well. And by the close, the industrial average was down 134 points, down to 26,462. But the NASDAQ was higher, up 16, and the S&P lost just 1 point. And here's a closer look at 3M. Investors punished that stock after the company lowered its profit outlook and said that revenue fell in most of its divisions. Bob Pisani has more now on today's mixed market and the signals the earnings season is sending.
We're about a quarter of the way through earnings season, and so far an earnings recession is looking less and less likely. That's good news. 3M and UPS may have missed the mark, but strong earnings beats from Facebook and Microsoft and CNBC parent company Comcast gave a significant boost to S&P 500 earnings growth estimates, which have ticked up from down 2.5% 2 weeks ago to flat today. And that's good news, but we're not out of the woods yet. The stock market has been rallying on the belief that the economies in China, and to a lesser extent Europe, have been bottoming. But comments in the last 24 hours are reminding investors that this debate has not been settled. First, South Korea's surprise announcement that it suffered its slowest growth since 2008, dropping 0.3%. That was a real warning sign. The weaker growth read in that region was driven by weak semiconductor sales, largely to China. We also heard from 3M, which gets 20% of its revenues in Asia, pointing to slower growth in key markets, including China. Remember, the chip makers are particularly reliant on China for growth. Texas Instruments, another chip maker, said Tuesday weakness in chip sales may continue into this quarter and the next quarter. And Lam Research, which is one of the largest semiconductor manufacturing equipment companies, said last night that this spending correction in the memory chips will extend through the calendar year. That's still a warning sign. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
Intel added to the disappointment after the closing bell. The company said that it's taking a more cautious view of this year, issuing a revenue and earnings forecast that is well below what Wall Street had been expecting. And this is the first quarterly report since Intel's new CEO, Bob Swan, took over. And investors expressed their dismay, sending that stock lower in initial after-hours trading tonight. Josh Lipton has more.
$4.9 billion. That refers to how much revenue Intel's DCG business generated in the quarter, or chips for servers. That was down 6% and missed estimates. Stifel's Kevin Cassidy says that was the big number to him because he reminds us that's Intel's most profitable business line, and because it's the business segment that should have the most long-term potential growth. But Cassidy says it looks like the big cloud companies aren't spending as much on those server chips right now as they wait to see if they require additional capacity. For Nightly Business Report, I'm Josh Lipton, San Francisco.
As for Amazon, it blew past earnings expectations. The company's profit more than doubled on cloud computing growth. Just look at these numbers. Amazon earned $7.09, easily surpassing the estimate of $4.72. Revenue rose about 17% from a year ago compared to more than $59 billion. But a tepid sales forecast created volatility in the after-hours trading session tonight. Deirdre Bosa has details.
We've been seeing a slower growing but more profitable Amazon over the last year, and that narrative was intact this quarter. Growth in Amazon's core e-commerce business is moderating, while its cloud computing segment, known as Amazon Web Services or AWS, it continues to drive overall growth and profits. Last year, the company delivered quarter after quarter of record profits as they reaped investment from the last few years. But this year, the company is warning that they're going to be in spending mode again. Amazon is making big bets in groceries, devices, and pushing abroad to challenging markets like India. For Nightly Business Report, I'm Deirdre Boza, San Francisco.
Let's turn to Tuna Amobi to talk more about these numbers from Amazon tonight. Tuna, of course, senior equity analyst at CFRA Research. Good to see you again. Welcome back.
Thanks, Bill.
You know, for years, Amazon, their sales growth was so strong, but they weren't profitable. Now sales growth is slowing and their profits are getting fatter. What do you make of that?
Well, what I make of it is that there's better visibility in terms of kind of the operating outlook. It's pretty clear to us that the company is on some kind of momentum in terms of generating operating cash flow and free cash flow. Both of those metrics are like almost double to triple compared to a year ago levels.
Right.
And as was indicated earlier, Amazon Web Services continues to outperform expectations.
However, you know, analysts love to point things out detail-wise, and while 41% growth rate in their sales of their cloud service is strong, it's not as strong as the previous number when it was 49% sales growth. Is that a warning sign of any kind?
I wouldn't read into that as a warning sign. Obviously, I think there's also a law of large numbers. There's no question, Bill, that the cloud computing space has gotten a lot more competitive. But if you look at that division, they also reported over 300 basis points of margin expansion just this quarter. We think that by the end of this year, it's going to exceed a $30 billion run rate business. So that continues to be the major catalyst. And I don't see that slowing down anytime soon, just because the space is also growing, globally.
What about the Whole Foods experiment, the acquisition there? I mean, it has mixed results. Let's face it. What is your outlook for that division?
So yes, I do agree that the jury is still out in terms of the overall outlook for the Whole Foods and in fact for the physical stores in general. The one silver lining is this quarter they reported 1% revenue growth in the physical stores, which compares to a 3% decline last quarter. So sequentially, seems to be going on the right direction. Overall, I would look to Whole Foods as more or less a strategic asset, potentially even a loss leader as they look to kind of expand their online grocery delivery business. Very quickly, do you like the stock here? I do, Bill. We're still recommending a buy opinion with a 12-month target of 2,000, which we'll be revisiting fairly soon. All right. Tuna Amobi with CFRA Research again. Thanks for joining us tonight. Thank you, Bill. Now to the economy. A new report out this morning said that orders for long-lasting durable goods posted their biggest increase in 7 months, rising by 2.7%, led by stronger demand for cars, planes, and networking equipment. Economists say that the increase signals a rebound in the slower-growing industrial side of the economy. And in another report, the number of Americans filing applications for unemployment benefits increased by the most in 19 months last week. Jobless claims rose by 37,000, but experts still say that the underlying trend continues to point to a strong labor market. Time to take a look at some of today's upgrades and downgrades. We start with Facebook. That was upgraded to a buy from neutral at UBS. The analyst cited strong advertising trends that were mentioned in Facebook's earnings report that we told you about last night. The new price target, $240. That stock was up more than 5.5% to $193.26. American Express was upgraded to overweight from equal weight at Morgan Stanley. The analyst cited the company's strong revenue growth right now. Price target, $140. That stock was up more than 1% to $115.88. And Tesla was downgraded to neutral from outperform at Wedbush Securities. The analyst cited changing demand for electric vehicles right now. Price target, $275. That stock fell 4% today to $247.63. Still ahead, why houses for sale in a famed Connecticut suburb are just sitting on the market.
Wall Street's trillion-dollar club has a new member, Microsoft. The company hit $1 trillion in market value for the first time today after its latest earnings report. Microsoft now joins Apple and Amazon as the only U.S. companies to ever reach that milestone. But how significant is it, and what does it say about the state of our economy right now? Ivan Feinseth is here to talk about that. He is Chief Investment Officer and Director of Research at Tigris Financial Partners. Good to see you. Welcome back.
Thank you.
I learned something today, and you taught it to me. The first company to hit $1 billion in market value was?
GE.
No, it was U.S. Steel.
U.S. Steel.
We'll get to GE in a second here. But 1901 is when they hit $1 billion. That must have been huge at that time.
Yes.
And then GE hit $100 billion for the first time in 1995. But now we have the trillion-dollar club. What does it say about the changing nature of our economy to see these companies now hitting $1 trillion?
Well, what was interesting about U.S. Steel and GE, they were manufacturing companies that were heavily capital-intensive, financial capital-intensive, where Microsoft, Apple, and Amazon are actually intellectual capital-intensive. These three companies have tremendous returns on capital. Well, Amazon has the ability to create incremental additional return on capital. They all have significant excess cash and free cash flow that they continue to reinvest in their companies. And actually, all three of those companies should really accelerate returning cash to shareholders. They have such an abundance of cash. They have very little debt. The only reason these companies even have debt is because the cash that they earned overseas could not be brought back to the U.S. without paying tax. So what they did was they pledged that cash to debt and then have been buying back stock or paying dividends in the U.S.
Now, do institutional investors, which, let's face it, they are the ones that move the market, do they view a company differently when they hit a milestone like this, do you think?
Well, it's kind of just a number. It's a large number. It's been driven by their growth. And these three companies have very strong growth. And most importantly, very strong return on capital that continues to compound the growth of their equity.
So you don't think this will change the nature of the beast as institutional investors view these companies as investments then?
No, I think these are industry-leading companies. They are game-changing companies. I mean, if you look really at, like Larry Kudlow talks about Schumpeter, that companies that have disrupted, these companies have disrupted many industries and really improved life and brought down costs of so many things that they've changed the financial landscape of the world.
Who else joins the club, do you think, at some point?
Google, Alphabet. I mean,
they're a little late to the party, aren't they, right now?
Like $890 billion, but I think out of those four companies, I think that Alphabet is one of the cheapest and really has so many. They have the leading mobile operating system. The Android installed user base actually is significantly more than the Apple iOS user base. They have incredible autonomous technology. I mean, Waymo is estimated to be worth anywhere between 150 billion as much as 150 billion of their almost 900 billion in market cap. They are a dominant cloud provider, and they also are the dominant search provider with over 98% search market share, which is incredible.
Well, probably won't be long before they hit that number there. Ivan, good to see you again. Thanks for joining us.
Thank you.
Ivan Feinseth with Tigris Financial Partners joining us tonight. Elsewhere, sanctions on Iran have so far cost that country more than $10 billion in oil revenue, that according to a U.S. official. It was just on Monday when the White House said that it would end all waivers on Iranian sanctions. And today, the price of domestic crude fell about 1% to just above $65 a barrel. World leaders are gathering in Beijing as part of China's so-called Belt and Road Initiative. This is a sweeping infrastructure project designed to expand that country's global trade links. But the program has a lot of critics. Eunice Yoon is in Beijing for us tonight.
The Trump administration has described China's Belt and Road Infrastructure program as a debt trap. Well, on the first day of the three-day summit, Beijing is sending a message that it's going to fend off that criticism. Generally, the way the program works now is that you borrow money from the Chinese to pay the Chinese to build stuff, and then you owe all that money to the Chinese. That's been an issue for countries like Pakistan that now have a lot of debt. Secretary of State Mike Pompeo has described the program as non-economic and predatory, and Washington didn't send a delegation here this year. Today, China's central bank governor said Beijing would set new criteria to attract more private and international financing, consider a country's ability to service a lot of debt, and offer greater transparency in lending. IMF Managing Director Christine Lagarde, who's here for the forum, called the move a welcome step. Though I did speak to a European official who said that his companies, who are already wary of getting involved, would want to see more information before committing to join. President Xi Jinping is going to be speaking tomorrow and is expected to potentially moderate his language in order to address some of the apprehension among China's trading partners. For Nightly Business Report, I'm Eunice Yoon in Beijing.
UPS says the winter sent a chill through its business, and that's where we begin tonight's Market Focus. The package delivery company reported an earnings miss and had to pay $80 million in extra costs because of the severe weather across parts of the country that caused operating profit to fall in its main business unit. But the CEO did say the company's fundamentals remain strong.
If you look at our air volume in the U.S., it was a 7% increase over the year before. If you look at our ground yield, it was up 2.7%. And even with the weather, we were actually able to bend the cost curve down. And then in our international business, with the trade pressures that you see, whether it's Brexit or U.S.-China, we were still able to have a record first quarter.
UPS shares fell 8% though today to 105.13. Southwest Air says its bookings are strong and it's forecasting better than expected second quarter revenue. The low-cost carrier, though, was forced to cancel flights due to the grounding of Boeing's 737 MAX jets, and that is something that the CEO says the company is dealing with.
We've got to work through this MAX issue. When we launched the MAX airplane, we felt like it was the best single-aisle airplane in the world. And we still feel that way. Obviously, this MCAS issue needs to be addressed, and we're happy with the way that Boeing and the FAA are collectively addressing that issue.
MCAS is the navigation system that they're working on. Shares rose a fraction today to 53.35. Bristol-Myers beat quarterly expectations thanks to strong drug sales. Sales of their blockbuster blood thinner called Eliquis jumped by 28%. The company also raised its full-year guidance as well. Shares were up 2% today to 45.64. Comcast reported better than expected earnings, but revenue came up light. The biggest U.S. cable company was helped by the addition of high-speed internet customers, and the CEO says streaming and broadband are a big part of Comcast's future.
In our case, in the U.S., led by the broadband business, which is now substantially larger than the video business. So the more people want to stream, the more you want the best broadband. Hence, you're seeing the kind of results we saw today in the first quarter, which is why broadband's been strong, not just this quarter, but all of last year, and we hope throughout the remainder of this year.
Shares touched a 52-week high during the day, ending up 2.5% to 42.93. By the way, Comcast is the parent company of CNBC, which produces this program. And then after the bell tonight, Starbucks topped expectations thanks to solid growth in North America and in China. The company also said that they currently have nearly 17 million active loyalty rewards members. Shares were volatile after hours tonight, but they did close the regular session up 1% to 77.11. Also after the bell, Ford posted much better than expected results thanks to strong demand in North America for those popular trucks. That helped offset losses in both China and in South America. Ford is in the midst of an $11 billion restructuring plan that the CFO says is starting to work.
Well, the Chinese economy seems to be stabilizing. We saw on an industry level the SAAR about flat on a year-over-year basis. The government has already announced some things that they're going to do, for example, a reduction in VAT to stimulate the broader economy, but also our sector. And there's rumors that they're going to do more. So the government recognizes the importance of this particular sector, and it's possible that they'll give us a bit of help and stimulation as the year progresses. But overall, I think we're seeing a more stable environment than perhaps where we were a few months ago.
Ford stock rose sharply in the after-hours session tonight. It closed the regular session at $9.40. Mortgage rates climbed for the fourth straight week last week. According to Freddie Mac, the 30-year fixed-rate mortgage averaged 4.2%. That was up slightly from the prior week. As you know, mortgage rates are closely tied to the 10-year Treasury, which dipped earlier this year, but has since been ticking higher. Well, the biggest home builder in the country disappointed investors even amid ongoing demand for new homes. D.R. Horton is now forecasting 2019 revenue below Wall Street estimates. And in its earnings report today, it did not provide an outlook on gross margins for the year. And that pressured the stock as investors grew concerned about the impact of rising costs on the home builders' future profits. And there's another concern brewing in one corner of the real estate market. That would be prices for high-end homes. They are dropping in high-tax markets. Just look at Greenwich, Connecticut, where residents are complaining that sellers can't even give away a house. Diana Olick has details.
On the grandest streets of Greenwich, where heads of hedge funds lay their heads to rest.
I'm seeing people that are selling at a loss, absolutely. And it's across the board. And it's, yeah. It's a problem.
Real estate agent Jennifer Leahy is not the first agent on this 6-bedroom, 9-bathroom colonial. It is indicative of everything going on in high-end Greenwich today. It's been on the market for over a year. Started around $5.4 million, dropped to $4,995, then $4,800, still nothing. Now Leahy is dropping it to $4,500. It's all about the changes to the tax laws hitting this market hard.
It can be significant. You're looking at $5, $6, $7 million properties that pay $100,000 to $125,000 a year in taxes, and now you can only write off $10,000. What that does is impact value, but it takes a while for buyers and sellers to agree on what that value is.
Greenwich sales in the first quarter of this year were down 25% compared to a year ago. The median price down 17% to just over $2 million. Days on market, 214, and inventory is up to a 2-year supply of homes for sale. In other words,
it's a great buy right now. So my buyers are getting awesome deals. I mean, I had a buyer who bought a house for $6.6 million that was on for $8.25. I had a buyer who bought a house for $750,000 that originally was on for $900,000. So you get a deal in every price range right now.
And that makes it a nightmare for sellers. These homeowners actually bought the home over a decade ago, and now they're looking at potentially taking a loss. For Nightly Business Report, I'm Diana Olick in Greenwich, Connecticut.
And coming up, the movie that is likely to break all kinds of box office records. Here's a look at what we're watching tomorrow. More earnings, this time from ExxonMobil and Chevron, among others. We'll find out how much the economy grew in the first quarter when the government releases its quarterly GDP report. And here comes Uber. It's scheduled to start its roadshow tomorrow. That's a series of presentations leading up to its initial public offering. That's what we're watching for on a busy Friday. And now that tax season is over, the numbers are coming in right now. The percentage of households with refunds is nearly unchanged compared to last year, it turns out. According to the IRS, the average refund was smaller, down 2% on average to $2,725. As has been widely reported, that could be because many did not change their paycheck withholdings. Well, Disney and Marvel's latest Avengers movie is flying into movie theaters this weekend, and analysts say that these powerful superheroes will likely shatter box office records. Julia Borston breaks down the big money behind the big action flick.
This is gonna work, Steve. I know it is. Because I don't know what I'm going to do if it doesn't.
A superstar lineup of Marvel's superheroes and the culmination of a decade-long journey for these characters, on track to deliver a record opening weekend for Disney's Marvel. Avengers Endgame is projected to bring in between $270 and $300 million at the domestic box office, and as much as $700 million from overseas markets, putting it on track to near $1 billion worldwide, a record by a long shot. The last record held by Avengers Infinity War's opening weekend last year.
Demand is through the roof. I mean, I've been in this business for 15 years. I've never seen anything like this film, and I have seen Star Wars The Force Awakens as well as Avengers Infinity War. We have never seen movie theaters scramble to add as many showtimes as they are adding.
First day ticket sales in China of over $107 million, smashing the prior record. And Fandango says ticket pre-sales in the U.S. are 5 times what the last Avengers film drew. With the domestic box office down over 16% so far this year from the same period last year, Avengers Endgame is expected to draw back moviegoers and rev back up box office numbers, not just with this film, but by exposing moviegoers to trailers for a range of big sequels and franchise films coming up this summer.
I definitely expect Avengers Endgame to revitalize the box office. It is a film that people take off work to go see. Screenings are around the clock. Everyone will be there opening weekend with those packed crowds, reminding them why it is so much fun to go to the movies. And so I think that will definitely help inject some life into the box office.
The film's expected to benefit from rave reviews, a 96% positive critic score on Rotten Tomatoes, and from word of mouth spreading like wildfire on social media. Avengers Endgame is one of the top trending topics on Twitter. For Nightly Business Report, I'm Julia Borston in Los Angeles.
And that is Nightly Business Report for tonight. I'm Bill Griffith. Thanks for watching, everybody. Have a great evening. We'll see you tomorrow.